But I mean, after that, we have 1050 macro, that should be fine. And then if you decide to look at the PM session today, we do actually have, you have CPI, not CPI, sorry, bond auctions at 1:01 p.m., 13:01 p.m. So if you are looking at that, we're probably going to see an increase in volatility right around there. So yeah, just be mindful of that. We don't have 10 a.m. news, just 8:30, and that was it. I'm watching the fair value gap on the 15-minute chart here. We just tap into the order block right here. But yeah, it's not as clean as I'd actually like to see. If CPI had came up, swept out the highs on all of them, we traded back lower, then we could see continuation down to these session lows down here. But you can see we're trading all the way to the premium end. So I'm actually looking at the buy side instead. You can see here's the clear buy side liquidity target on ES, right? So we're trading up all the way there on ES. So now watch how we should find some support there. These gaps in here, right? Plenty of room to run. So this is like the one time where I feel like opening range is not terrible to trade. If if you have a setup that's regarding the 9:30 open, true open, when we have 8:30 news, you can actually just use that as your entry point, or you can look between 9:20ish and 9:30, or even 9:20, 9:40. You can find volatility that comes in the marketplace right at 9:30. Now there's obviously you can use the 9:30 kind of window as a trade model in itself on other days where there's not 8:30 news. It just becomes much easier to predict when we are not anticipating a Judas swing, right? Like if you were to capture a 9:30 movement before, by the way, watch this order block here. See, we're accelerating up. If you were to capture a 9:30 movement, like just when we have 9:30 as a true open, you're only going to be really looking for like that Judas swing movement, right? So you have to get in, get out quickly, and you can't hold it for the rest of the day. That's why after 10 o'clock, it's normally useful just to stay stagnant during that first 30 minutes, and then 10 o'clock, you can maybe ride it for the rest of the day. But nice expansion up. Watch this to be used as inversion now, especially if you can close above it properly. Still a good 30 points up to the buy side. So expect that to be ran out. I do want to see ES ran out for sure. London high is preferred, so let me actually put an alarm up here. We can see right here, no 9:30 Judas, just quick acceleration up, tap back into the previous low probability order block, but respecting there very precisely, trade all the way up now. So this should hold as inversion. We really should not see a return back to this order block range at all, since we have breakaway gap preferred right here. And then a sibi, or sorry, a bisi that may form right on top. Still expanding. And yeah, we still have the sell side liquidity down here on the 15-minute chart. That's a good point. So these relative equal lows are also of interest if we want to reverse at 10 o'clock potentially. So I'm going to mark these out. So watch how we form this gap. Now, preferably this is left open as a breakaway. I marked this out a little too early. So I don't want to see more than 50%. Obviously, we can get an order block tap, but preferably this is just left 50% open. Now, the best way you can predict breakaway gaps just by tape reading is if we have consecutive candle closures where we're closing above the opens. So see how we have a up closing candle here, another up closing candle, and then this one closes all the way at the premium end near the open. Typically, that's a good sign that you want to leave that gap unfilled. You can see here, closing almost above the open there. I'm trying to find some good examples. But that's something where you can tape read breakaways. So watch now how we respect the IFG and this bisi. That's already 2 PD raised. You want to see hold. We also do have a tiny breaker in here. I don't know if you zoom out, you probably can see it, right? If we're trade above that. In terms of the daily time frame, we do actually have probably more buy side on the daily. Yeah. So buy side all the way up here too. This is your daily target. Let me mark that out actually on here, just in case you want to continue to expand. We also have a tiny gap in here that we're filling. So holding the premium end of this IFEG, I still want to see a majority of this breakaway left unfilled. Just tapped it there. Now we don't have, so this wick here, we have a large wick. So this yesterday, we're going to mark these out and draw equilibrium. You can see sometimes we get respect off that. I did not mark out the RTH gap. So we do have this RTH gap lower too. I don't know what color to mark this out. It's a lot of stuff. I'll try and keep it a little bit less. But now just watch how we respond to this breakaway. So we're filling right around 50% of it. Preferably you don't want to see that the rest of that filled. We do have an order block. Bar retracement at 940. Do also have to get above this last up closing candle, right? So if you want to remain bullish, this would be treated as your, in a bear scenario, this would be treated as your CISD. If you want to remain bullish, then you see a closure all the way through that, and that'll confirm the bearish order block with these last 2 down closing candles. Buy side still up here pretty far, good 150 points, and I don't think we'll hit that today, especially with the daily sibi we're trading into, a tiny one right there. Look at this as the manipulation phase though. 4 is all the way up there.
Order submitted.
Okay, so we're still holding that IFEG breakaway left majority open, right? We just came down and filled right about wow, 50% of it. I can mark that out. Now this down closing range right there is not what you want to see, right? If you want to continue up, filling all the way down to the breakaway. Can remove this. So just watch how we're holding. We're disrespecting some bullish PD arrays. But if you look at the higher time frame, I guess we're filling it now with some selling. So watch how we respect the order block. Look at ES as well. Yes, we're trading back into that order block range here, right? And we did close above it. So watch how I'm very curious to see if we leave these relatively highs here, that would be a little weird. But I'm watching to see how we hold this order block on NQ. Let's take a look at DXY quickly. TXY starting to pop up. Watch this gap, the sibi and the order block here. Morning. So this is kind of the last line of defense for bullish movement. If we do trade all the way through that, that'd be your bearish breaker. I still find it a little weird that we left the relative equal highs on ES up there, and the SMT, and we didn't actually get an expansion all the way up to the buy side. Yep, C of that wick. Was it perfect? Passed it by one point there. Right about perfect, yeah. We do have the sell side here on the 15-minute chart that I'm still watching. And this opening range gap we may want to fill right down here. But I mean, best case scenario is you see this, you trade up to the buy side, you get a reversal there, and then you can see this, the market maker buy model that formed here, and then a market maker sell model that forms after. Yes, trading through there, bisi once more. Now on a higher time frame, you have to understand what the different time frames look like, obviously. So this down close and up close quickly is going to be a wick on higher time frames. So if we look at something like 2 minute, see it's now a wick inefficiently filled. So we're going to return into that range. So if you're looking at something like a 1 minute or even a 2 minute, this can happen on any time frame. But when you see that down close, up close quickly, it'll look like all these gaps are efficiently filled. But if price was to return into it on a higher time frame, that's all just wicks back and forth, right? Now we're trading aggressively lower. And DXY looks like it's starting to trade all the way through this, possibly treating this as inversion if we want to climb above. Let's see, take a look at, so I think you're dropping off aggressively. So look at the sell side down here. I'm very curious in that, especially since we left that relative high. So, and we also have the RTH gap we're trading into. Definitely not as clean as I'd like it. We have the macro approaching soon. So now this, assuming we're not just coming out and filling the RTH gap and flying up, this right here would be your old selling. That's your inversion order block point we're going to be looking at. So if price comes up, taps into it, respects it, your perfect old selling scenarios where you don't see candle body returned above it, especially when we pierce it with this large down closing candle. Nice reaction off of it. So obviously you have to get comfortable with flipping bias. We get a pretty good bias going to the morning. 9:30 pops up, no Judas there. Trade up, failed to get to that buy side by what, like 10 points, 20 points? Yeah, 14 points or so. Saw the breakdown of 3 PD raise. You saw that breakaway gap disrespected with this down closing candle. And the last line of defense I said you wanted to see for bullish movement was this order block here. And we're now using it as inversion. So overall framework wise, it is looking like we're going to head for this sell side. RTH gap being completely filled too, but I don't think that's enough of a support line. We're going to bounce off the discount and then trade all the way back up, right? Because this to me looks, we are trading back into discount, but I think that this retracement all the way up to here and then trading all the way back to discount doesn't make sense. If we're going to look at a daily range to trade into discount, it would be this one here. Okay, but see the candle body closing below, another one hopefully closing below. Do have a tiny gap here. Once we close below that, we have another gap here. That'll cause some resistance too. But if you go to a 2-minute, looks pretty efficient below that on the 2-minute. Higher time frames, the 5-minute, we'd have a gap down here too.
Order canceled. Order canceled.
So you can look for this, I guess, as a target. Let me send a screenshot really quickly to predictions chat. Tap into the 5-minute breaker. So yeah, just got to be careful here.
Order filled.
As your first target, so watch how we may get some respect off this. Now this is the other portion of old selling, right? So we have a low risk first stage, possibly second stage, but I'd like to see some sort of actual retracement here. Yeah, like that.
Order submitted.
It's now filled with buying and selling completely. Then obviously once we close below that, it should be used as inversion. Now this breaker here, let's tap into the 5-minute breaker. Let's take a look. This one up here, or maybe I'm confused which one. But if we're looking at this breaker, this one down here, the internal range one, you can see it doesn't actually take the liquidity. So for price to actually respect this, we would only be looking at the fractal market maker buy model in here. So up to this high, if that makes sense. So if this is the buy side, then your breaker, possibly this last up closing candle, that'd be the breaker I'd be looking at. This in here, since we're not taking the higher time frame sell side, I wouldn't be looking at the higher time frame buy side. So watch this potentially be used as inversion. We have 950 macro here. Sell side as your current target. Still a good, what, like, yeah, 50 points away. So obviously I'm not expecting, as long as drawn liquidity is not hit before 10, we're expecting retracement at 10 a.m. But if it is hit here, I don't even know though, to be honest. It just looks a little wonky to me. Like we traded all the way up to the order block there. Respected, you can see the bearish SMT slightly, right? Traded up all the way just with the wick to the bearish order block, and then he has traded all the way up to the candle body. So you could actually be looking at the lunch low there as well. Was it 16,869? I'll send that to predictions chat just as a level. So this now inversion. We also filled the entire RTH gap right? We closed it. So you can delete that. I haven't done enough research on the RTH gap to tell you if it can be used as inversion. I'm assuming since it's just like every other PD array, it can. But normally you can use it as a target more than a means of kind of entering, if that makes sense. So if we have a large gap and prices running for that, it makes sense for it to be filled 50% or halfway, or all the way up to the premium or discount end. But I'm not sure if, like in this scenario where we're trading back into that range, if it can actually be used as a PD array that's inversion. I assume it can be, but I just don't know. So there's your IFEG tap right at 1052. I'm tempted to put a short on here. Just a little demo short. Obviously, with the extended volatility today, your stop losses are going to be quite large. Take profit as well. So I would say if you can, use lower position size. All right, we got it above this IVG, above the tiny imbalance in there. Probably on a lower time frame, this will be an imbalance, and then above the inversion, the old selling here. So all three of those PD arrays, I assume, should hold. Look at the respect to that old selling too, right? Close below it, tapped into it, close below, no return. So I want to see the same exact process used over here. Now, when you're using old selling, you're trying to find them, the little points. It's going to be the most obvious ones and the largest candles. So I have a whole separate video on it. So if you want to watch that video, it's called, I think it's Advanced Guide. Let me type it up in chat. Something like that. If you want the PDF data, you can also shoot me a DM after the stream and I'll share that to you. Can you send a screenshot of the settings for TFO kill zones and pivots after stream? I can do it right now. Oh, I didn't have it on. Send it right in here. These are, I think, the main stuff. And then pivots. I don't think I have any opening prices. Yeah, I just manually do those. Once we close below this up closing candle, I'd like to see that used as a bearish order block, but we consecutively keep tapping into this IVG, which I don't like as much. Like preferably this range in here, after we close below it, we just expand. Especially during a macro time, this kind of consolidation is not expected. Still holding that old selling though. Let me actually mark out that 5-minute gap. Oh yeah, we're tapping into it right now. So in between two PD arrays, you're going to wait for displacement. Obviously, with the current scenario we're in, I still assume we're going to reach for that sell side. Let's take a look at yes, reaching for their short-term sell side here. Tiny gap in here that's left unfilled. And then lunch low is still a target over there. This was also like purged. So we had, this is very weird for a CPI. ES piercing the sell side substantially, failing to pierce the buy side. And then if you look at, oops, NQ, piercing buy side, failing to pierce the sell side. So it's such a weird CPI. I was actually I had high hopes for it to be clean price action so I could show you guys what the 930 like failed Judas and 850 macro and all that stuff looks like. But I mean, I guess it is what it is. So we're trading back down, respecting that old selling for the most part. Same thing here. I'm looking at this up closing range. Now, if you have different order blocks like this where it looks kind of funky, just switch time frames. So look at the 2-minute. It's much more obvious. This 2-minute order block is what I would draw out once we close below. 1 minute, you're like, okay, do I use this one or this one? Now, technically, both are correct. I would use the most previous one, right? So this up closing range here. If this one dipped lower, I would use that one. So I would just say the easiest way is just to go to a different time frame. And you can look at it there. But we're still bouncing off this one. I don't know why this. There we go. So liquidity not met. We have 3 minutes till 10 a.m. So preferably if we get displacement here, next 3 minutes or so, we see retracement to a sibi. That'd be best case scenario. But also with that ES gap up here, we actually could see this retracement at 10 a.m., which may actually stop us out on NQ. So I'm watching right now how we want to hold these candles. Now remember, when you have consecutive candles in an order block range, each candle that we close past is going to serve as an order block individually. So if you look at, I'm trying to find a good example. Okay, so watch that 10 a.m. gap up here. Okay, I'm gonna send a screenshot for this. I'll send it to predictions chat. So that's your 10 a.m. retracement potentially. Just like how we saw yesterday. If you look in here, right, we have an order block range on ES. And actually, we'll go back to NQ. 2 consecutive candles. Once we close above it completely, you want to see the entire range hold, right? But that same applies with this down closing candle. You can see once we close above it with this candle here, used as an order block, right? Tapped into it. Then once we close above the entire range, we're using that entire section. We're not just going to be using that top one. We're going to be using this entire section as a whole order block. Same thing with this, right? We have 2 here. Chopping back and forth here. Remember, I told you with silver bullet hour, we got to be careful. So preferably we see sell side ran through probably by 10:20 and then potentially chopping around after that.
Order filled. Order canceled.
Trading up. Let's actually go back to, I'm going to take this, we'll leave it on, but I feel like it's going to get stopped out, especially if ES reaches into their gap right at 10 a.m. Displacing back lower, returning to premium. If you look at the current daily range, I mean, it's not all the way here. It's not really a good retracement I would like to use. I mean, we are filling this 3-minute gap all the way. So that's one thing to point out. There's a tiny gap here, right at 10 a.m. So I guess you can use that 3-minute. Tracing all the way up into here, taking out the internal range buy side one last time. Right up to here. That's nice. Internal range buy side, retracement still on 3-minute. Can remove some of this stuff. I'd feel comfortable adding a position here if we can return back to that order block range, tap it.
Order filled. Order submitted. Order submitted.
Okay, so watch for potentially the bottom portion of this 5-minute gap to be used. Now, this swing low is still partial, the sell side is still partial, and then lunch low is kind of that final. Whoops. Where's lunch low? Market maker model. I mean, you could actually use this as original consolidation too. The lunch or the London low from yesterday. Tiny gap in here. Tapped into it, used. Now I do want to see a breakaway gap form. We're leaving consolidation range in here. So if we form a speed point, that first gap we see should be used as inversion. There we go. So starting to get some acceleration now. All right, I'm going to trim the stop there to the discount end of this fair value gap. Completely balanced it on the 3 minutes, so I don't think there's any reason we should return into here, especially with this order block range forming. We have this 5-minute inversion now layered on top of there. Getting some speed. Obviously, this is still a partial point, so you could be looking at this. So we'll just wait for this sell side. I do think that this is the main target, this sell side I have marked out. I think that'll complete, obviously, this market maker sell model, but anything past that is extra. This retracement off this would be kind of random, right? If we were just take this sell side and not ever sweep this out again, especially with the relative equal lows on the 15-minute chart, that's a higher time frame. Relative equal lows you're going to be looking at. Typically, whenever you see 15-minute relative equal highs or lows, that's a really, really good target going to the morning session, especially when we pierce the other side. So accelerating lower. We have a tiny wick there, but there's your first partial. Just want to see speed now to the sell side. Put this in profit, don't want to get stopped out. And there you go.
Order canceled.
Easy enough, right? I'll send a screenshot of the prediction, or of the execution label, sorry. Right in there. Take this off, send it to predictions chat as well. Let's watch for London low. Sorry, lunch low. But for the most part, there you go. So there's your extra partial. Bagged and tagged. W. Yes, sir. Have you waited to shorten that 3-minute zone instead? Yeah, for sure. That's your, I told you we're not going to be looking for reversal at 10 if we don't see drawn liquidity hit in this scenario. So whilst ES did have a 1-minute gap here, we didn't fill. We're watching to see if that same movement was going to happen at 10. See, right at 10 a.m., we see this internal range buy side sweep. Can barely see it there, but we have relative equal highs. Take it out, and then on the 3-minute, we're still technically in that retracement stage because we're filling an unfilled portion of that 3-minute gap. 2-minute, it's also 2-minute unfilled. That's like a textbook entry, right? That's almost your 940 reversal, right? 940 reversal, low risk on the 950. We didn't really get a clear low risk, but 10 a.m. is just a beautiful entry there. And we're selling off now. You obviously could be looking for London low. Trying to figure out a way to get there. This sell side. I didn't think we were going to plunge this far. Hopefully this can load. Beautiful, halfway to 50K funded. Nice. Just hit my 250 as well. Good stuff. Hey, you show up every day, stuff like this will happen, right? This is why you can use that economic. You just got to be patient throughout the week. Didn't get huge setups the rest of the week, but as soon as CPI hits, we know exactly what we're looking for. Execute it perfectly, and I mean, realistically, you could be done for the week just based off that. Let me send these also liquidity levels. That's 16, 816, how we wanted to see, right? So that's sell side, and then lunch. This is original consolidation. You could be looking for sell side. So if I full screen this, I'll send this over too. What is this? 16,775. Walking away, yeah, after an AM session, right? So, okay, I'm not expecting for anything for silver bullet hour here. So between now 10:30, 10:45, I'm not going to be looking at anything, and then 10:50 is really the next window. But I mean that, what is that? 40 points, right? That was a decent move. 60. Wait. Where did I enter? Oh, I entered down here. That's why. Poor entry on my part. You can see in the morning when I woke up, I tried taking a demo short here, right at 8:54. It was on my phone, so I didn't even see what was going on. I just closed it on manually. But overall, pretty good stuff. We're dropping off way further than I thought. Just realized we took out London high at 8:30, so we didn't need to clear it again. Correct. That is correct. Let me full screen this again. We did take out the London high. That's true. But I said very early on in the stream, I wanted to see it. If you look here, this high on ES failed to take it there, and on YM we failed to take it. The same high. I didn't actually see that YM pierce this, but I wanted to see how, if we potentially could climb up there, especially since our higher time frame liquidity objective was up here, right? I mean, if you look at the weekly too, we're still looking at higher time frame. So it makes sense to me if we wanted to use that weekly gap and expand. I was not expecting this deep of a retracement off of this tiny gap here though. But you know, still able to capitalize on it. We flip bias. So it's, if you stick, this is something everyone needs to learn. Obviously you want to have a bias, but be able to flip your bias when you're wrong, right? So identify when you're wrong. I told you that order block was the last line of defense we wanted to see. Traded all the way through it, and then immediately there we flipped bias. So that's one of the tools that, it's not something that can be directly be taught, I guess, but it's something that you still need to learn. Don't trade the 850 macro normally. No, I don't. The only times I look at the 850 macro is during large 830 news drivers. So CPI, NFP, even, you know, any random 830 news driver that creates high impact, preferably a Judah swing, then you can see the 850 macro return towards the untapped liquidity portion. Here's your macro end. So I'll send this screenshot actually to macro review really quickly. Let me clean some of this stuff up so it's not as messy. All right, I'll send that to macro review. Might go for a yesterday AM session low. I just took that out. Or at least that was ES. NQ, yeah. So this is your original consolidation. If you zoom out a little bit, 30-minute. Original consolidation, right? We're looking at this range in here. I guess low risk, first stage, second stage, smart money reversal, low risk, first stage. We're looking at potentially a second stage to be formed. But that's your relative equal lows down here and original consolidation. So everything starts with consolidation. You have to just identify it. Easier said than done, right? We're trying to find original consolidation before they happen. But if you see those guys, I mean, even ICT does this, where he knows exactly what stage of the market maker model we're in, and then therefore can find the draw on liquidity based on that. I would say the easiest original consolidation you can be looking for is your Asian range, right? We already know that's everything starts with consolidation, and we're expecting a consolidation period to happen during Asian range. So what you can do is, obviously, if we don't see an Asian high or low pierced during London session, then you can use the AM session to target that original consolidation period. If we see a Judah swing happen like this, then that would be your market maker model in here. So it either happens during London session or it happens during the morning session as we target something like this. Here you go. So this was Tuesday. We had original consolidation with the Asian range. London failed to create a Judah swing above that. So we continue to move lower. Then right at 10 a.m., 9:30-ish, swept out liquidity. You see reversal during New York's session all the way up to original consolidation. Here we have a London protraction, sell side swept. So that would be your market maker model. You wouldn't see a market maker model clearly in the New York AM. You can continue to do this back and forth like here. Market maker model in there, right? During London protraction. Here we don't have any London protraction that takes out the high. Instead, we have 8:30 large news drivers. That's your true open, right? So that's why this green shifted box is over to the right. And it looks like this is the reversal happening during New York. This is still New York, but this is your true open, right? So we see that sell side purge one last time. I think this is NFB, right? Then we trade back up, taking out the Asian range high and eventually up towards further buy side liquidity targets. Here, take it out. You can see the market maker model in there. Continue to do this every single day. So if you see a day where there's no Asian range swept out and we don't see London protraction, that's a very, very high probability day where New York AM is expected to reverse. I'll actually post that in the New York AM session news. We'll put it in there. So and that's basically your bread and butter setup, right? If you just want a market maker model to form, that's your easy one. So protraction is just like a large move. I just kind of classify it as a Judah swing. So instead of protraction, you could just use Judah swing. So Judah swing here, Judah swing, no, or failed Judah swing, sorry. It's just when we have manipulation in the market that takes out one side before reversing to the other. On a high probability day where we see New York expansion, you want to see this movement where we're taking out one side of Asian range, piercing some sort of discount PD array. Sell side can be included in that. And then you see expansion during New York, right? Here we have market maker model. So if you're looking for that, there it is. ESI really looked really good for the fast short you talked about. Yeah, right in here with the efficient delivery. I agree. You probably won't see a huge retracement to this range. You could see just speed down to the sell side. Let's look at the 15. Yeah, even 15 minute. Looks pretty clean, right? We do have a tiny portion in here that's unfilled. So I'm sure if we extend this out, we'll probably get a reaction off this. Right, so it's good. If you're looking at the hourly, it's good to drop down just to make sure we're filled on the lower time frames. So if we extend this portion out, so normally the gap is like this, right? We only have wicks in this portion. It's only 2 wicks, so there you go. Expecting it perfectly. See how the candle buys now are just staying right at that level instead of the previous level. So if I expand this out, we'll go back, we'll extend it so you can see this is not some made up thing. So you can look at the layered portion. So there's your, see how we obviously dip into it, but the candle buys are respecting that unfilled portion instead. Bounce off 8:30 open in the 1 hour sibi 2. The higher time from looking back helped me a lot. Oh, the CISD up here. Oh, yeah. ICT is crazy. When you actually look at his executions, obviously when you're new, he'll be executing. You're like, I have no idea what the heck he's doing. But when you learn these different mechanics he's using, the way he enters with such confidence off of like a CISD or one specific PD array as soon as he sees it break, it's actually nuts. Topside giving a free code for reset on the YouTube live stream. Oh, nice. if you're using, I don't know which. There's one prop firm I just saw. Oh, FTMO. Stop taking US clients. So if you want to use TopStep, that's a great brand right there. I'm not affiliated with them, but still a solid brand. What's the difference between a Judas swing and power of 3 AMD? It's still basically the same thing. So if we're looking at a Judas swing is when we want to see that opposite side of the market purged. We may have so say we have a bearish predisposition on a higher time frame, meaning we're expected it to go lower. We want to see that Judas swing up here, taking out the buy side and then trade back lower. That's the same thing as, okay, what the heck? Same thing as power of 3. Right? So this, in this scenario, this would be your Judas swing, right? Which is the same thing I just showed you before. So power of 3, AMD, accumulation, manipulation, distribution, and then the Judas swing are all the same thing. So they're all interchangeable. The Judas swing just specifically refers to that portion where we see the manipulation. So power of 3 and AMD are all three of them, right? So I guess if you want to compare it to one, that's your manipulation phase. Not trading related, but where are you from? I'm from the US. Born and grew up here, still live here. Plan on potentially moving out though. I want to see the rest of the world. Thailand is super nice. We had some Thai folks a couple months ago. Oh, which state? Oh, I'm from Michigan. Live in Michigan. Was born right outside, right outside Detroit. So like suburban Detroit. Yeah, and cheap. That's true. Flight tickets are $3K, but when you're living there, it's like $20 for an apartment. No, I'm just kidding. Yeah, that's true. Spain is nice. Even Saint-Tropez in France. All those coastline European countries. Portugal. So we're trading back up here. On a normal day, this expansion, if you saw this as true up on at 9:30, this expansion that happened at 10, you would see a market maker model that forms here at 10:20, right? But I told you beforehand, silver bullet hour, you're not going to be looking at on a day with 8:30 high impact news. Nice. Where in New York you from? Upstate. That old selling, what does that mean and how do you trade that? So old selling is, this is going to be your inversion order block point. Let me actually send the, oh, Brooklyn. Nice. That's where my mom was born. That Brooklyn drill goes crazy. All right, let me send you the video. But it's basically just an inversion order block, and then we're using the place that we want to see reaction from. So I'm trying to pull this up. That's why I'm kind of. So here's the video. So it's just an inversion order block point. Obviously, we want to see bullish reaction here, like we saw off this wick. Then once we close below it, we're not going to be using this point up here. That's your premium side. We're going to be using the discount side on a bearish example. So we're going to draw that old selling out. And then when price comes to retap into it, you want to see reaction. Best reaction is when we tap into it in candle bodies. Once we see a closure below, you don't see a candle body that closes above that point. Okay. Same thing with the bullish examples. So if we're looking at bullish PD arrays, old buying in here. That's your inversion order block. And the first inversion order block you see is going to be your breaker, right? So breaker in here technically too. Breaker in here. Last stop closing. That's your old buying. But the old buying and old selling, you can actually see it applied everywhere. So if you drag all those portions out, let me just show you this example first. Old buying here. Right? Old buying over here. All the way at the top. So you can see once price closed above it, no return. Price closed above it, no return. So useful. But if you want to use the entire range, that's kind of the range you want to see used as a PD array. So if you extend the entire range out, and I'm not pulling every single black candle from the left side. I'm pulling the most obvious ones that were used as bullish order blocks. So I'm not going to be taking this one. Obviously, it is a point of old selling, but it's not clear and obvious where it would be a high probability order block. If you wouldn't use it on the left side, I would say you shouldn't like mark it on the right side. Obviously, you should mark out everything, but in terms of just tape reading efficiently, these tiny candles I'm not really concerned with. Same thing with here, this and this. But you can see once we extend these out, when PD arrays line up on top of it, this 3-minute gap, this order block, price tends to stay in there and respect it, especially when there's multiple PD arrays that line on top of each other. But old selling in here, tapped into that. So there's a little trick you can use. Everything you use on the left side charts, order blocks, breakers, fair value gaps, sell side liquidity, buy side liquidity, all will be used on the right side chart too when we're in clean market maker models. So obviously that old selling and old buying is best to use when we're in a clear market maker model. It's a little bit harder when we're outside of one, just because you don't know where first of all you have to understand where the drawn liquidity is. So if you don't know where the drawn liquidity is, it's going to be more difficult. But like here we have a clear market maker model, right? Old selling right in here. See price respecting that level, also layered with a fair value gap. That's actually where we entered yesterday, right? Oh, why is it not showing up? This is the problem with paper trading on TradingView. It always removes it'll randomly reset, whatever. If you look at the old future trades pictures, there's execution label of us entering here. Anyways. So yeah, 1050, we'll be waiting. For next week, or potentially for tomorrow, these relative equal highs up here at the buy side, I'm still looking at. The higher time frame, we do need to see this inversion gap used. If I mark this out, clear some of this stuff out. We did close above it slightly there. So I want to see how this gap is used completely. From monthly perspective, we do have this bullish order block range. Weekly perspective, we're basically bounced all the way to discount in there. We're trading all the way back up. So obviously once we close above that on the weekly, bullish order block. And then February, I think seasonal tendency is a bullish month. I could be wrong on that. Let me see if I can find a picture. Yeah, February typically a bullish month. And if you're looking for your true seasonal tendency quarterly shift, between March and April, I think. Yeah, low formed between March and April. High formed during DXY. You just look for the shift there using IP to look back, and then you can. That's actually helpful for higher time frame structure. So if you're looking at Roth, if you're looking at, obviously I'm not a financial advisor, so don't take this as financial advice, but if you were to look at long-term kind of stuff and demo, then using quarterly shifts is very helpful. Do you think now that we took data news low, we will go for data news high? I would find it very, very weird if we were to return all the way up to here in the same day. I do think this will be pierced at least by next week. I don't think it'll be pierced today. I just don't know. But that being said, we do have news drivers in the PM session. We have, it's not marked out here. Oh, it is. But technically this is at 13:01 is the official timestamp. So this is not going to be as volatile as the 830 CPI, but this will still bring volatility in the market. So to answer your question, I don't expect it to be pierced. It's a possibility, but I think it's low probability. Like the market maker sell model at 1050 to sell side. I like that too. I think if we can trade back up into premium here, like we're doing, maybe consolidate a little bit more, do whatever it wants to do, and then 1050, if we see a nice displacement leg, can be targeting the external range sell side in here. Now with the market maker model, if we want to see internal range buy side and apparent daily range retracement, we want to see some sort of buy side form. So if we don't have a swing high over here, then you're going to be looking for this consolidation range to form a buy side in premium. So if we see this, we have internal range buy side here. Right, so if you want a true move lower, you'd want to see this pierced and then it moved down to the sell side. Previous day low at 16,801.5. Yep, right down here. I also like it because of the higher time frame consolidation, right? And you can see, I didn't mention this, but consolidation period, we wanted to see the breakaway gap form, and we got two of them. Breakaway gap here form, another breakaway gap here. That obviously we're filling now, but in terms of when we're targeting sell side, it was not retreated back into. Let me actually take a better picture. I'll send this now to macro view. Fib 4.0 as target. If we're using this high, I assume that's what you're talking about. It's all the way down here. I would find that weird. That's pretty far for a one-day movement. 360 points. Unless you're talking about a different fib. For using this one. Which one are you talking about? Oh, it's just fantastic. There's your time fib finally working. Entry. Exit right around 4 and tapping to the 2 to 2.5. I'll share this to the breaker time fib. $15-minute order block plus for value gap. That's true. Right over here. Order block range for value gap all the way to the premium end. ICT showed us how to use funded yesterday. Yeah, that video of him executing, what was it, 100 contracts on NQ, making 53K. He's just showing off his guns until Robin's Cup. That's what, next month, right? I think it's next month. I'll be checking that leaderboard every day. So breakaway finally now being used. right, so there's your buy side sweep into premium again. Now, if you're looking at a market maker model, this is the original consolidation zone. Preferably external range is your target, but you need to trade all the way through this bisi first. You have a breaker. It's actually pretty clean. I don't know if it'll be streamed. I'm actually not sure how that system works. I assume they're probably gonna update the leaderboard every single day. But I don't know if they're actually gonna have live trading, since there's so many different people actually in the competition. So this is now used as inversion, by the way. Preferably it's BPR, but you can see the internal range liquidity sweep, tap into the higher time frame PD array, and now you want to see potentially sell side used. Should see speed into this as well. Then some South American PhD guy won futures for Robbins. This month I think he did, right? The Argentinian guy got like 400% in a month. Because I saw ICT gave him props on Twitter, which was kind of weird since he left Twitter. But yeah, that guy's nuts. I'm curious to see what strategy he used. He's the guy who draws the pictures on the dollar bills. Financial engineer. Oh, some algo. Yeah, I'm sure he made it. I think it's scripted. So watch this inversion order block range. That's the old selling point still. So best case scenario for 1050, we see continuation. Oops. Maybe return back to the range, something like this. I'll send this over really quick. DXY needs to be popping up still too, if you want to see that same movement, but this kind of looks like a market maker sell model. Internal range buy or external range buy side. And we do have this kind of wick back and forth. This is not really original consolidation. This is the original consolidation to be looking at. So sell side down here just got purged. We're going from external range to internal range too. So I don't know if we're going to reach all the way down to AM low. Obviously, if you want to see bearish movement on indices, we should return to the high on DXY. Look at that nice 15-minute gap in the order block holding. Right in there. Let me check the hourly charts really quick. ES did take out their consolidation lows from yesterday. So keep that in mind. We took out the AM low on ES. I'll send this picture really quick to this chat. So take a look at that picture. ES took out the lows and NQ slight SMT at the bottom. So we got to be careful. I think we may just end it there. With DXY kind of showing a market maker sell model and ES piercing the lows, I'm not too confident we're going to get a high probability setup for 1050. So I'll post the stream recording up. Future Trade is already posted. If you want any questions or if you want the backtesting data for the order block videos or any of the data that I have, shoot me a DM after the stream. I'll just cut it short there because we've been going since 9:30, so I don't want to take up too much more of your time. But yeah, for 1050 macro, preferably we see a market maker sell model down to the sell side. If not, if you start trading back up, I'm not interested in any of that. So 9:40 tomorrow, we'll do it normal time tomorrow. Do we actually have 8:30 news tomorrow? We do have 8:30 news tomorrow. So expect the same kind of price action, right? No 9:30 Judas. It was kind of weird that we didn't get this was, I guess, a Judas, but expect that same kind of price action tomorrow. Be careful with silver bullet hour. If you're looking at the PM session, be mindful of the 30-year bond auction. It's at 1301. So that's going to bring in some volatility. We could see consolidation beforehand, but as always, if you decide to trade the rest of the day, please be safe. Don't do anything stupid. And I will see you guys tomorrow morning, Lord willing. So take care, stay safe, enjoy the rest of your day. I will see you guys then. Peace.